YouTube, what it do? It's your boy Young Soros here back with another video, and today we're going to be talking about how to actually make money off the stock market. This is a highly anticipated video as a lot of people want to know, how can you make money off of this market and compound your bread and things like that. So let's jump right into it, starting off with you have to be okay with you're going to lose in the stock market. Listen, it happens to the best of us. No matter who you are, you could be Warren Buffett, George Soros, it doesn't matter. We all lose in the stock market. The stock market is a numbers game. Investing and trading is a numbers game. So, with that being said, you can't get emotional about this stuff because getting emotional will lead you into the next our subtopic, which is you're gonna fall into the revenge trading trap. Now, listen to me. All right, here. Here's an example you got going on. Let's say you buy a stock and you think it's gonna go up, right? You put $1,000 into the stock, boom, stock drops, you lose $500. You're like, well, I'm down $500. I need this money to feed my kids or to do this, to do that. So what are you going to do? You're going to put more money into the same stock. That stock drops even more. Now you're down, instead of $500, you put 1,000 more in there. Now you're down $1,500. And you're saying to yourself, well, damn, I got to get back the losses I just had. So you're going to keep doing this. And then it's a snowball effect until eventually you're poor. So don't do this. Do not get emotional and do not fall into the revenge trading trap because it will get you nowhere. Sometimes in the stock market and investing world, you got to be down before you can be up. So even though you may see your account be negative or you may see some losses in your account, you're maybe losing a trade, that doesn't mean you are going to lose that trade. You got to envision these things out into the future. So you just gotta be okay with losing. You may have a trade where you're up 1,000% and you're saying to yourself, I'm a genius. You may go into the next trade, the next 5 trades, you may lose. That doesn't mean you're stupid. That doesn't mean you're the greatest person alive if you were able to hit last 5 trades. It just means that you had an idea and you threw it out there and it didn't stick, and that's okay sometimes. The best shooter in the world, I'm gonna relate this to basketball, Steph Curry, greatest shooter in the history of the sport. He doesn't even shoot 50%. So if he's not even shooting 1 from 2 for his career and he's the greatest shooter in the world, then you should be okay with not hitting every single trade because that's not even how trading works. That's not even how life works. So you just got to be okay with going into trading knowing that, or investing knowing that you may lose money, but in the end, the gains will outweigh the losses. And we'll talk about that later. But our next topic is there are different ways to make money in the market. Now, listen to me, all right? I hear this a lot when I talk to people about investing, and people ask me, yo, Soros, you buy the stock here and then you sell it up here, and then that's how you make money. Yes, but there's different ways to make money in the markets, and it's not just about buying a stock at $100 and selling it at 200. No, there's different ways to go about it. You could sell a stock at 200 and then buy it back at 100 and make a profit. That is called shorting. There's shorting stocks. You can trade options, trade futures, and we're going to talk more about the options and futures into a different video, but I just want to let you guys know that trading options, trading futures, bonds, currencies, all this different stuff, it's not a one size fits all right, guys? So it's not one size fits all. You just got to understand that there's different ways to go about it. If you're more slow paced and you don't like risk as much, don't trade. Invest. Get you a ETF. You want to put your money into the SPY ETF. Buy bonds, buy dividend stocks. Buy good growth name stocks, buy value, all that sort of stuff. But if you're more fast paced and you have more to lose, or maybe you have nothing to lose for that matter, you want to go more on the riskier side, whether that be buying, growth stocks, or buying stocks that, maybe you only see the potential, but it may not work out. It might be worth like stock, $5. Just throw some ideas out there, speculate a little bit. Maybe you want to try getting into trading futures, whether that be trading futures on the currency side, or trading oil futures, or even spy futures for that matter. Invest in technology, trade options. If you're more fast paced, you more about making money fast paced with more risk, then this is the route to go for you. But what I will say about, there are different ways to make money in these markets. There are also different prices. So if you want to go slow pace, less risk, you don't have to put up that much money up front. And the same thing with the fast pace, but it's going to cost you more because you're going to be accruing more losses. And what you have to do is you either have to just deal with the fact that, okay, I'm going to take more losses, so I'm going to have to put more in, and then work with your different strategies. Or what you can do is that you can go about it and say, hey, I'm going to manage my risk, and then, limit the losses, so that way you'll stay alive, and maybe you'll hit that 500 percenter. So that is that. Make sure you remember this. There are different ways to make money in the stock market. You just got to go out there and do some research on it. This is a very in-depth topic. There's all different types of ways to go about it. And if you guys want different ways to go about it, then let me know. You guys will learn how to trade options, trade futures, bonds, all that sort of stuff. Comment down below and I will get you that information. But our next topic, we are going to be talking about your wins are going to outweigh your losses. Let me say that again. Your wins are going to outweigh your losses. I'm going to relate this to basketball again. Steph Curry, greatest shooter in the world. He shoots insane shots, right? He's shooting some insane shots out there. But the shots that he hits, those might win him the game, or the shots that he might hit when he's shooting 3 in a row, 4 in a row, those might win him the game and win him a chip, or things like that, a championship, all that sort of stuff. But if he's out there and he's not shooting because he's afraid that he's gonna miss 3 threes in a row, then he's missing out on all the games he could have if he was to shoot these threes, and go in. So you just got to look at it like that. You got to change your mindset when going into this. You got to be okay with losing and know that your wins will outweigh your losses. Now, there are ways where you can lose and your wins won't outweigh your losses, but we'll get into that later. But just know that the golden rule in the investing world is that your wins will outgain your losses. And you got to evaluate your risk and evaluate the play. So you have you buy a stock and you don't want to lose $50, right? And you buy the stock for $100. If it hits a price point where you're going to lose $50, or you're not okay with losing that amount of money, pull out, or put your stop loss higher, or think about it in a long-term perspective. Do you want to hold this? Are you okay with sitting on this huge loss in your account, or is this make you uncomfortable? If you're not okay with sitting on a huge loss in your account or on your first trade, then pull out and try it again. It's okay to not be okay with losing money, but what I will say is that you got to be okay with it, because at the end of the day, sometimes you may be down a lot, and then you may see those losses start going into wins, and that might be your biggest gainer of the year. I've had some trades where I was down on it for the majority of the year, or even for a couple of days, and then next thing you know, I'm up 2,000%, 5,000%, and I'm looking at it like, wow, if I would have sold out here, then I would have definitely missed out on those opportunities. But it is a 50-50 at the end of the day. You got to do what you're comfortable with, but just manage your risk and evaluate the play. If you're seeing things that develop within this stock, let's say Apple, for example, the phone sales, Apple's not selling phones that well. Are you going to sit there and keep buying the shares of Apple if you see that Apple's not selling phones that well? Of course you're not. So you got to evaluate the play and evaluate the things that are affecting it. Are you going to keep buying Apple if they're not selling phones, or are you going to buy Amazon when they're selling products like it's nothing? So keep that in mind when you're making these trades and making these investments and these plays. And just remember that the gains will always outweigh the losses. Going into our next topic, just because the market is bad doesn't mean you can't make money. So we had a bear market in 2022. In 2022. Just because we had a bear market in 2022 and the markets have been volatile and things like that, does it make it harder to make money? Yes. Are we, less likely to see a run like we had from 2018 to 2020, 2021? Of course we are, but that's just the nature of the game. There's ways to make money in a bull market. There's ways to make money in a bear market. There's ways to make money on the upside. There's ways to make money on the downside. That's where shorting comes into play, where you can sell a stock even though it's at $200. You can buy it back at 100, and if you buy it back at 100, you keep the profit. That is called shorting. So there's ways to go about that. Or if you don't want to short and you just want to do the options, where with the options, I will make a video on that because options can get real complicated really quickly. But to simplify it, with shorting and how it relates to trading options, you can buy a put and then it will protect you, and you only lose the amount that you put in to the option. With shorting, just regular shorting, you can lose more than you put in. So that's the thing with, trading and investing. You can lose more than you can put in at times depending on what you are doing. So keep that in mind. And even if a market is going up or going down, there's hedging. There's things called hedging. You're shorting a stock and it's going to go down, but the market is irrational or doing its own thing. You can bet for the stock going up short term while shorting it, so you can get gains on both ends or limit your losses or doing like that. That's called hedging. That's why there's options. Options are used to hedge most investments and plays and things like that. So keep that in mind when you're going into this. You want to make sure that if you're uncomfortable with the current conditions around it or the current environment that the stock market is in, look at different options. Look at hedging. Look at shorting. Or if you're not too comfortable with those things, just wait until the market goes down a little bit more or where you're comfortable at buying and just buy more. And once you get to a certain point where you say, I can't do this, then just, get out. But you can't get too emotional and you can't get too attached because you'll never be able to time the bottom or the top for that matter. Nobody can. The market is its own beast, and timing the top or the bottoms is an extremely, extremely difficult thing to do. I haven't seen an investor yet that's been able to do it. So, with that being said, timing the market, yes, it is important, but don't let that be the only thing that stops you. And you gotta think bigger picture. So let's go take a look at this chart. Let's go take a look at this chart. Whoops. If we zoom out, let's zoom out. Let's zoom all the way out. So the SPY at one point was at 348. And this was the bottom. This day right here, this green little candle right here, this day was the bottom. And you want to know what caused that day the bottom? It was when inflation hit almost 9% and everybody freaked out. And the stock market took it and ran with it. Now, am I saying that, oh, it's impossible to, get the gains when you're at the bottom or, no, what I'm saying is the market isn't what people think it is. It is more psychologically driven than anything. So, with that being said, down here when we were at these lows, people were afraid. People were like, "Oh, the stock market's going to crash. There all this fear, doom and gloom." And then you had this day and it ran up ever since. Ever since. And you could have got in here where you had the March banking crisis. You could have got in here. You could have got in here. Or you could have even got in here on this drop. It doesn't matter because at the end of the day, if you decide to get in right here and you take this loss and then get out because you're scared that it's going to go back down here, Well, look at what you just missed out on, all these gains. But on the flip side, let's say you assume that if you go over here and you're like, okay, the market's going to rebound, boom, it rebounds for a little bit, comes back down, you sell out here, you just missed a whole bunch of gains all the way up to here. So you got to keep that in mind when you're trading and investing. You got to think bigger picture. Where is the market going to be within a year or within the next 6 months? And what is the psychology? One thing I like to keep in mind is if everybody is saying that the world is ending, it is usually a good time to buy. And when everybody's saying the world is all peaches and sunshine and rainbows, we're going to hit all time highs and everybody's all happy and jittery, this is usually the time where you want to start cutting down your wins, selling stuff, think about hedging and doing things like that, preparing for a downside because the market, like I said, psychology driven. So you don't know when it's going to turn, but you always want to be prepared for the turn. And even if you miss the very, very top, you still can make money even if you get in late. You just can't get in here. Like some people will get in here and get up here. That's a decent gain. But what if you got in down here or down here? That's where the research comes in. That's where your own discretion and things like that and taking risks. That's where it all comes in because you just never know with the markets. It could go lower, it could go higher. And that's why you have these different things that you can look at and say, okay, go with your own assessment. Guys, when investing or trading, don't listen to anybody else but yourself, okay? Do your own research, and if you're not confident with the play or what's going on, don't trade it because you're not going to have the resolve where you're going to buy down here and everybody's scared and you're thinking to yourself, at 9% inflation, how is the market going to even bounce back from this? And then you miss all this. So, keep that in mind. Another example I have over here is Nvidia. Last year around this time, same time frame in October, $100. Nvidia was worth $100. Now it hit a high of almost 502. Currently almost about to hit 500 as we speak. The market is open right now, but yeah, guys, imagine if you were investing at this time or you weren't looking at stocks, you were saying the market is terrible, this, that, and the third, the world is going to end. Market just, Nvidia just ran up, $502. That is in a huge, huge move. Like, don't get me wrong, the moves that the market is making, these are abnormal. These aren't normal moves that are happening. And that's why you got to take advantage of the volatility and the times that we're in. But there's also downsides that come with high volatility, even though there is a lot of upside to be made or downside to be made for that matter. So keep that in mind. I just want you guys to think on that. Just because the market is down or you see stocks at a cheaper price, that's where you want to get in. You don't want to get in here at 502 where everybody's talking about, oh, this is the greatest company ever. You want to get in here where everybody's like, the company's dying, news is coming out that's not favoring the company. You want to get in here. Now, granted, it may be a little uncomfortable and scary because you're looking at it and you're saying to yourself, man, all this bad stuff is coming out. Why would I want to invest into it? Psychologically driven. So it doesn't matter whether news is good or bad, world's ending or not. It's all about what's going on within the psychology of the stock. They had good earnings all the way up until now. They even just had good earnings recently, but they sold it off. But we're not going to get into that. But they had good earnings all the way up, and each time they kept hitting earnings, it just kept getting higher and higher, and eventually they're going to they might hit 600 or they might sell it all off coming into 2024. So you just got to keep the lookout. But once the sell off begins in the video, that's when you can start saying, okay, do I want to start shorting this or do I want to buy and average down? Things like that. So you got to keep that in mind when you're trading and investing. You're going to lose, okay, guys? So be comfortable with losing and you'll get far. But that is all, ladies and gentlemen. Drop a like if you like what you saw, and hopefully this was very entertaining. Not only entertaining, but I tried to give you guys a little visual on what's going on, and hopefully you guys learned something today. That's all I want to try to do, is try to inspire you guys, to try to help you guys learn how to make money in the markets, because the markets can teach you stuff, very valuable stuff. And this is something that most people should know, especially at a younger age. So I want to be able to guide you guys into the way of learning how to trade, learning how to invest, and things like that. And some people may look at it as gambling and this or that, but the way I see it is that life is just a gamble. If you walk outside tomorrow, you don't know if you can get hit by a car or not. The odds are probably low, but even if the odds are probably low, odds are still odds. And with gambling, the difference is that you don't have anything to base it off of. You go to a casino and pull the lever, that's it. You're just going off of based on what pops up on the screen. But with investing and trading and things like that, you can get a feel for what's going on, how you can play it, and there's different ways you can go about it where you can make money and minimize loss, but you will still lose eventually. And then, so just keep that in mind. Or you can just play poker, play poker too. That's cool. But, you know, poker doesn't last you a lifetime like stocks will. You can hold stocks for 20, 30 years. So keep that in mind, ladies and gentlemen. Hope you guys like, drop a subscribe down below. Comment what you want to see next. You want to see options trading, how futures trading work. I want you to tell me what you want to see in the comments section down below. Like the video and share it with everybody. Just spread the word. Spread the word. And I'll talk to you guys later.